Tonight, the most powerful name in money just stepped into the room that sets the conversation for governments and CEOs worldwide. This isn't rumor, and it's not speculation. It's on the World Economic Forum's own site and confirmed by major outlets. BlackRock's Larry Fink has been appointed interim co-chair of the World Economic Forum. The date stamp matters here. The forum posted a statement on August 15th, and the wording is explicit. Its leadership page now lists Fink alongside Andre Hoffman as interim co-chairs. If you understand how capital moves, you understand why this matters. When the largest asset manager on Earth takes a seat to help steer the forum's agenda, the questions on the table change, and so do the flows that follow. Here is the scale we are talking about. BlackRock oversees roughly $12.5 trillion as of the latest quarter, a record for the firm. That isn't just stocks and bonds. It's exchange-traded funds that wire money into every corner of the market, it's private credit and infrastructure, and it's risk systems many institutions rely on to measure their portfolios. When a firm that touches that much of the financial plumbing gains a stronger voice inside the firm's boardroom, you should expect the next year's playbook to tilt toward themes that accelerate some assets and pressure others. Before we get into what may change, note the timing. The WEF just concluded an internal probe into its founder and announced governance changes. The previous insurer stepped down. In the same announcement, the forum named two interim co-chairs, Larry Fink and Andre Hoffman. That word interim is doing more work than it seems. It signals a transition period, a leadership bridge, and a chance to reset priorities before the next annual cycle of convenings and country-level dialogues. So what does an interim co-chair actually influence? The Board of Trustees sets oversight and strategic direction for the institution. It doesn't pass laws, but it does shape the agenda that finance ministers, central bankers, and corporate leaders carry home. Think of it as programming the questions that will occupy the room for the next 12 months. If you program the questions, you shape the answers. And if you shape the answers, you steer capital. Start with energy and transition finance. BlackRock is already a dominant allocator in climate-focused funds, grid infrastructure, and project finance. Expect a heavier push on frameworks that make private capital flow faster into transmission lines, resilient grids, and large-scale storage. That could mean clearer risk-sharing models with governments, faster permitting templates, and standardized reporting that reduces the friction institutional allocators complain about. Utilities with credible capital plans, equipment makers with backlog visibility, and the lenders that finance them will be the early beneficiaries. Next, watch the architecture around digital assets and tokenized markets. Fink's firm has championed spot crypto exchange-traded funds and has spoken about the tokenization of securities and cash. An interim co-chair who understands market plumbing could elevate work streams and move tokenization from pilot decks to cross-border standards. If rails become interoperable between banks, asset managers, and central bank sandboxes, the winners will be platforms that offer compliance-first settlement, clean identity, and instant reconciliation. That future sounds abstract until you realize it cuts the time value cost of waiting for money to show up, which rewrites how collateral, liquidity, and risk are managed. Third, focus on capital formation for critical supply chains. The past 2 years rewired trade through resilience and friendshoring. Expect the agenda to lean into semiconductors, rare earths, grid metals, and biotech manufacturing. Here, the signal to watch isn't a headline. It's the emergence of pooled vehicles that blend public equity, private credit, and multilateral guarantees to crowd in pension money. If those vehicles scale, spreads compress for qualified projects, and the cost of capital drops for the companies that clear the bar. There will also be a recalibration of the debate around ESG. BlackRock has taken heat from both directions and has already shifted from broad labels to specific financial materiality. Inside the forum, that can translate into less ideology and more measurable risk framing. Think climate risk as cash flow risk, nature as supply stability, and governance as the control system that keeps models honest. The practical outcome is a migration from sweeping pledges to sector playbooks with timelines, capex numbers, and testable milestones. All of this lands in markets that are already primed. The cost of money is moving down from cycle highs, liquidity is rotating out of cash, and passive flows are dictating more of the tape every quarter. If the forum's agenda for the coming season tilts toward fast-track energy infrastructure, tokenized settlement rails, and supply chain resilience, the factor biases that perform will shift. Quality growth with hard cash generation and capex leverage looks favored. Pure narrative names without unit economics will struggle to keep up. Now let's talk about power and perception, because this is where many people will get it wrong. The forum isn't a world government. It's a convening platform with outsized influence because it compresses the distance between policymakers and capital allocators. Larry Fink's presence as interim co-chair doesn't give BlackRock a magic baton. What it gives is agenda gravity. When the person who oversees $12.5 trillion speaks about the next bottlenecks, committees form, pilot projects appear, and procurement priorities shift into places that matter. There's a detail in the announcement that tells you where the story goes next. The interim structure implies a search and an upcoming decision on permanent leadership. That creates a window for signaling. Pay attention to early statements from the co-chairs about the themes they plan to prioritize. Track the first task forces they bless, the advisory councils they assemble, and which ministries show up to those calls. Most of the market will wait for the next big stage. The edge goes to investors who read the agenda before the headline cycle catches up. Here is your practical playbook for the next few weeks. Map your exposure to grid modernization, power equipment, and long lead energy projects that can pencil out with blended finance. Identify listed names tied to tokenization infrastructure, from qualified custodians to market operators that integrate on-chain settlement with existing clearing. Watch for sovereign announcements about friend-shoring projects that come packaged with guarantee structures. When the cost of capital falls and political cover improves, the green lights come faster and the re-rating follows the funding. One more point about credibility. People will argue about influence, but there is no debate about the fact pattern. The World Economic Forum has publicly announced Larry Fink and Andre Hoffman as interim co-chairs, and the largest business outlets in the world have reported the same. If you hear anyone call this a rumor, they are late to the update. The story is public and already shifting expectations inside boardrooms that control trillions. So where does that leave you? You have a short window to position before talking points harden into consensus. The combination of agenda access and balance sheet scale changes the speed at which new standards can move from idea to operating reality. Investors who wait for perfect clarity usually by the top of the first wave. The smarter move is to define the themes, pick the cash-generating leaders in each, and let policy momentum do the heavy lifting. If you want more deep dives that cut through the noise and put you in front of the move instead of behind it, subscribe now. Join a community that tracks the money, reads the signals early, and turns them into decisions that compound over years.